Good job. And I'll let you know when we get started. Let me get over there to my page. It's always just a little bit delayed when we go. There we go. Okay, we are live on Facebook. Good morning, everyone. My name is Tina Heuermann, and I am so honored to have Courtney Epps with us this morning. Courtney Epps has a PhD, an EA. What is an EA, Courtney?
Enrolled agent. It's the only credential you can get with the IRS.
Oh, okay. Gotcha. Courtney is a tax strategist, international speaker, and author of the best-selling book, More Relaxing, Less Taxing, and the book, What's Your Plan B? Why You Would Be Brain Dead Not to Have a Home Business, which is an in-your-face title that I love so much. She owns a full-service accounting firm in South Carolina and serves clients in every state. She's owned her practice for 19 years. You know, what really sets Courtney apart, and you're going to learn about this today, is the tax strategy she offers to clients is, as the focus is not just to prepare returns, but to free up money legally. And when you hear some of the strategies that she's used in her own home business, you're going to just be so amazed. I've been an entrepreneur for over 25 years with an in-home daycare and then network marketing, and I learned so much about tax deductions. Once I heard Courtney being interviewed by one of my mentors, Mr. Eric Worre, is actually how I found her. And then I started stalking her because all my friends and followers know that I'm quite the stalker when it comes to people I want to connect with and learn and grow from. But Courtney, thank you so much for agreeing to do this. I know you don't do this very often anymore. And I know that you caught that interview with me and Ray and my struggle and overcoming my drinking issue.
Yep.
And there was one night that I was really wanting to give in to the desire to have a drink. And I was like, okay, I'm just going to give it 2 hours. And I think I'd sent you that message requesting an interview like 2-3 months prior, but I know you're super busy. And I thought, well, I know she doesn't do those anymore, but you know, maybe she will, maybe she won't. And after I had given thanks to God for getting me through that rough period, it was like he held true on his promise. I'm going to make your business grow as soon as you give up your drinking. I'm going to make your business grow as soon as
That's
you give
right.
up your drinking. And then 5 minutes later, I hear from Courtney, yes, I would love to
That's
do
so
an
awesome.
interview with you.
I
And
love it.
yeah, it's such a great story. And you and I have become friends. I got to meet her at Rank Makers last year, and just so honored to have you on this morning. So with that, without any further ado, I didn't mean to talk about myself, but
You're good.
you play an important part in my life, and I appreciate
Thank
you.
you. Thank you. I appreciate that. That's awesome. And I mean, I didn't even know, like 3 people tagged me in it, and I'm like, am I in this somewhere? And they're like, yes. So I listened. I typically I'm not on Facebook at all because I've been in Facebook jail for like 10 or 12 months. I know at this point. So I stay off Facebook for the most part, which is why I'm trying to get back on sharing. So unless you want to see my calculator, sorry about that.
That's okay.
But yeah, so that was super crazy and awesome. I loved your story.
Thank you. Thank you for
All
taking
right.
time to watch it too. So Courtney's going to give us a presentation today on basically why you would be brain dead not to have a home business of whatever sort. And I want to make this clear. This is not a ploy to get you to join my team. I'm here to serve you in whatever capacity I can. And I know Courtney's the same way. Whether you have a car detailing business, a carpet cleaning business, a painting business, lawn care, daycare, whatever your business is where you have a home office, you're going to find value from this. And if you don't have a home office, you really need to consider finding something so that you can take advantage of it, because you're spending too much money in taxes every year. Courtney,
Right.
go ahead and tell these people.
Okay. All right, guys. So the name of my company is OTB Tax, just so you know, and that is short for Outside the Box Business Solution. So, but we go by OTB Tax. And here's my family. It's a little older picture now, but I have 6 kids. They range from 21, they're 21, 20, 19, 18, 16, and 10 now. So I just had 2 graduate 2 weeks ago, one from college, one from high school. 3 of my children work here full time with me at my office, and the other 2 of them work with me part time. So and I'll show you throughout the process how to hire your kids and how to keep more of your hard-earned money. That's really the essence of this presentation today. So, but just so you know a little bit about me, I am an author. I've written 2 books. I reside in Greer, South Carolina, and in 2020 we hit number 538 on the Inc. 5000, and in 2021 we hit number 807 on the Inc. 5000. So we're doing some big things in the accounting world, and so we have a full service accounting firm here in Greer, South Carolina. We have over, we do over 3,000 tax returns a year. So the name of the presentation is Why You Be Brain Dead, Not Own a Business. And the reason why I say that is because you truly would, and only because I'm saying that out of the kindness of my heart, because if you understood the tax benefits alone of having a home-based business, you would be brain dead not to have a business, because you are overpaying in taxes if you don't have one, period. So it's not about you being great at sales, or it's not about you having to have a business and not being a W-2 employee. It's just about tax savings alone. So the average household can actually save between $4,000 and $8,000 a year by having a home-based business. And I actually learned that not through going to college. I learned that through doing over 900 tax returns in a network marketing company that I was in. And I showed that I proved to people that they were saving more money in taxes than they were spending in their home-based business, even though they were not necessarily making money to start off with. So I was, when I would talk to them, it would be like, well, you're better off to spend this money on yourself instead of giving it to the government. So would you rather spend $100 on you, or do you want to spend this money on yourself instead of would you rather spend $400 to $700 a year in taxes, or do you want to give that to the IRS?
Sorry, just a second.
You're good. You're good.
There we go.
Awesome. Okay, so that was my big aha moment. It wasn't me going to school. It wasn't me learning about taxes, because I will tell you this: when you go to a 5-year accounting degree, which I have an equivalent of a CPA. I did not want to be a CPA, and the reason why is because I did not want to abide by a Circular 230 rule. A Circular 230 rule says that you cannot be overly aggressive with a tax return, and if you are, you will lose your rights to ever file a tax return again. So I didn't want to be enslaved, I guess, to the IRS, and I also did not want to. I wanted to do what's in the best interest of my clients and not was in the best interest of the IRS. So to me, it seemed like a win-win situation for me to not become a CPA. And then I later got my EA only out of necessity, because I had to handle some audits for clients that I did not prepare their original tax return. So in college, we don't learn how to save people money in taxes. So that's one of the biggest myths that you'll ever hear, is that my accountant takes care of my taxes, or they're saving me money in taxes. Most accountants have no knowledge or comprehension of how to save you money in taxes. That's why you're overpaying in taxes. 97% of business owners in the country overpay in taxes. Okay. So, what do we need to do in order to keep our hard-earned money? Well, there's 2 tax systems in this country, and you need to understand both, and you need to be involved in it, in at least one of them. And some of you are going to stay involved in both. So one tax system is the business owner tax system, which is created to provide wealth for you. And then you have the W-2 employee tax system, which is created to steal wealth away from you. And so don't get upset with me when I tell you that. It's just true. Okay. I mean, it's just true, hard-earned knowledge. If you are a W-2 employee, you are paying about 40% in taxes, then you're paying in health insurance that is overpriced because it's through your work. Then you're paying in a huge lump sum in retirement. Then you're stuck with a huge mortgage and huge credit card debt and that you cannot afford to pay. And on top of that, huge student loan debt. And because all of that keeps you enslaved. So we have to move over to the business owner tax system, even if it's a part-time thing. You don't have to quit your day job in order to start a business. That's why I love the network marketing industry so much. It's because they're giving you a product and an offering. All you have to do is share that information with someone. You don't have to build a marketing team. You don't have to build a sales force. You don't have to build an employee force to go out and do the things that need to be done on a daily basis. The only thing you need to do is open your mouth and tell people about what you're doing. So now you understand why I feel like you'd be brain dead not owning a business. And so what I do is I help attract more people into an industry, whether that be home-based business industry, real estate industry. I don't really care what it is. The home-based business industry is where it's at. And that allows you massive tax deductions along the way. So we attract more people into this industry. We help them keep more of their money when they're making it, and we keep them in long enough to win. So why is that important? Well, 46% of Americans don't have an extra $400 to their name, and 69% of Americans don't have an extra $1,000 to their name. So that means that if a tire goes flat today on someone's car, half the population of America doesn't have enough money to cover the flat tire. And so I want to help get people out of this impoverished system, the system that was just designed to steal and steal and steal from you. So I don't know if you know this, but the average American spends more money in taxes in their lifetime than they do on food, clothing, and housing and transportation combined. So add it all together, food, clothing, housing, transportation, combine that together, and you'll spend more money in taxes than you will on all four of those things. That's why it's important to know tax strategy. That's why it's important to understand it. And the average American household is actually going in debt around $7,000 to $12,000 a year. And the national debt in our country is more than $94,000 per citizen. This was $67,000 in 2020, which is absurd. Credit card debt is $7,400 per person. Student loan debt is up to $39,000 per person. So we have got that. What we have been currently doing is not working. So something has to shift. And here's the statistics. This is actually how I started sharing this information. See, I don't like accounting. I don't like taxes. I don't like paperwork. And so I tried for the longest time to do everything but. For about 16 years, I was a part-time accountant and I was a full-time everything else. I owned retail stores, wholesale companies. I've had vinyl signs and banner companies. We've done screen printing. I mean, you name it, I've done it. And then I got involved in network marketing. And so I heard these statistics by Grant Cardone one day, and it really hit home that what I was supposed to do and what I was put on this earth to do is free up money for the average household income. And so I'll share these statistics with you, and it's startling how much it's increased just over the last 3 years. So the average household income in America right now is $67,000 a year, and they're going to pay around $14,000 in taxes. That leaves them with a take home of $53,000. But the problem is the cost of living in America is $65,000 a year. Now that has changed from the average income was 61,000. They paid about 14,000 in taxes. Take home was 45,000, or excuse me. Yeah. Take home was 46,000. And then what was left over, it was about $50,000, $53,000 in cost of living. So 3 years ago, we were going in debt about $7,000 a year to work. Now it's $12,000 a year to work, 40 hours a week, 50 weeks a year to take 2 weeks paid vacation. That's absurd, guys. Like, we have got to figure out another way. So there's a solution. It's called a plan B. You've got to find something that you're passionate about that you can open your mouth about and just tell people about it. And then on average, it's going to save between $4,000 and $8,000 a year. And I mean, for some people, it's going to save far more than that. And then here's the thing. If you actually do and attempt to do the things that I tell you to do, you will start making money in this industry, regardless if you suck at it or not. because the matter of fact is that if you just attempt to earn an income and start sharing this information with people, some people are going to follow you. And as they follow you, they're going to share that with other people, and you continue to earn a stream of income off of them. So we don't want to ever depend on one income. We want to make an investment to create a second source always. You know, Warren Buffett said that, one of the richest men in the world. And home-based business owners are thriving if they're focused on building their businesses. I will tell you, in 2021 or 2020, one of the greatest things on earth that you could have possibly done for yourself is start a home-based business. Well, that's the same thing you can do for 2023 if you've not already done so. So we talked a little bit about these two tax systems, but I'll go into a little bit more detail about it. A W-2 employee tax system that was created to push money, or excuse me. So W-2 employee tax system, you are making your money, right? Then you're paying taxes. You don't get any say-so on how you pay taxes. And then what's left over, you're buying some of your wants and your needs. As a business owner, we are generating income and we're pushing money back into the economy. And then we're hiring an employee. So we're making our money. Then from there, we're getting some of our wants and needs met. I would say all of our needs, and then some of our wants become tax deductible. And then from there, what's left over, we pay taxes on if there's anything else left over. And so you may say, well, I've heard this rule that you can't have a loss more than 3 out of 5 years. That's a lie. Amazon had losses for 11 years before they ever made money. If you're truly attempting to earn an income, that's all the IRS cares about. So attempting to earn an income is spending 45 minutes a day, 3 to 5 days a week on building your business. Okay. So the business owner tax system, we're always going to pay the least amount in taxes. And the reason why is we're creating the system. We're pushing money into the economy. Then we hire employees and then they pay the lion's share of the taxes. Otherwise, if we weren't paying the least amount in taxes, we wouldn't have the money to pay the employees to work. So therefore, we're creating, in essence, a pyramid scheme. It's like the biggest pyramid scheme on earth is, having to have employees to work for you, and then they in turn pay taxes. That's exactly what we're doing. So why business owners get massive tax breaks is because 70% of all jobs in this country are created from small to medium-sized businesses. So they know if they give you massive tax breaks that you will eventually hire more people, and then they will have more people paying taxes. There you go. That's essentially exactly how the government works. So how are people supposed to get ahead or even plan to retire if they're only living paycheck to paycheck? I don't know if you know this, but 48% of U.S. families headed by someone age 55 or older have zero in retirement savings. So we've got to fix the problem. This is not working. Obviously, we've been doing this for 100 years now. It is not working. The system that they taught us, go to school, get good grades, go get a good job so you can make good money and you can work for 40 years and you can retire. It used to be 30. That's not true anymore. Now it's 40 years and you still can't retire. So why is it important to do tax strategy? Because 40% of every dollar you make is going roughly to pay taxes. So you may say, how in the world is that? Well, that's your FICA taxes. Then you have your federal taxes. You have your state taxes. Add it up. You don't need me to figure that out for you. So where's all the money going? And then we have extra taxes. We have property taxes, Social Security taxes, federal, city, state, and local taxes, licensing, sales tax, capital gains tax, use tax, and the list goes on. So how do we get past all the taxes? Start a home-based business. Okay. And I already explained how I figured this out. I did over 900 tax returns for people who were not business owners the year prior. I prepared their return. I was able to save them $4,000 to $8,000 a year. It was life-changing. So I actually had one couple that had not been successful at all in their network marketing business. They hadn't even used their product because they didn't have the money to use it. It was a travel company at the time. And so I saved them $4,100 on their taxes. They were a nurse and an engineer, had never been on a vacation, could not afford to go on a vacation, trying to sell people on why they need to go on vacation, yet they had never even used the product. So therefore you cannot, the way the network marketing industry works is you have to actually love a product and tell somebody about it. And when you tell somebody about it, then they may decide to get excited about it and they want to share it as well. So I saved them that $4,100. that they, you know, didn't have before. They used it to go on a vacation, then they hit the first rank in the company. And that was no joke, because the first rank in the company, you had to have 60 people on your team in order to hit a rank of residual income. So if you can have less than 60 people on your team and make more than $150 a month in your company, you're doing good. Because the first company I was involved in, that's what I was. And I'm not in network marketing anymore, so don't freak out. You can share this with anybody you want to. I have not done network marketing for almost 7 years, because it is so important to tell each and every person in every single network marketing company why they have done the smartest thing that they could have possibly done with their life and their business and for their family, was to get involved in a home-based business. So all businesses start in their garage or in their home, I included. We built our accounting practice up to $1 million a year business working from our home. And then we finally had to relocate because code enforcement showed up one day and told me I couldn't have 13 employees working in my house. Like, it wasn't even a decision. You know, it was like, it was literally the day before a tax deadline. And they're like, you need to have everybody out by 1 o'clock. And I'm like, that's not happening. We are going to stay here and work until 5 o'clock today. So, I mean, some people are forced out, you know, and that was me. So now we have a 6,000 square foot facility. You know, we have 25 employees that work for us. You know, we work in all 50 states. And so, you know, just like Microsoft, Google, Amazon, and every other network marketing company and every other legitimate software product out there, they all started in their home. They all started with an idea, right? Someone who was willing to go out and take the next steps. So what can we write off when we have a home-based business? The IRS describes it as this: any expenses incurred for the purpose of gaining or producing income and is incurred with a reasonable expectation of resulting in future business and is reasonable under the circumstances. So what does that mean in layman's terms? That means if you're attempting to earn income today or in the future and it's reasonable, it's tax deductible. Now, I'm not telling you that a Bugatti or a yacht would be tax deductible today if you decide to start your home-based business. But what I will tell you is that having your cell phone, your internet, your meals, your travel, your continuing education, Tony Robbins events, if you're building your business, all of those things are tax deductible for you. And so things that you're already currently spending money on, those are considered to be living expenses. Well, you get to redirect your living expenses and turn those into business expenses when you are in fact attempting to earn income and doing what's called daily business building activities. And those daily business building activities, I already explained a little bit ago, that's spending 45 minutes a day, 3 to 5 days a week, just attempting to earn income. That means getting on Facebook, getting on Instagram, getting on TikTok, creating reels, you know, all of those things can be attempting to earn income, calling people and reaching out to them and sharing with them the product or the service that you're offering or the business opportunity. Those are business building activities. So what tax deductions are you entitled to? Now, this is just a big screenshot of my deduction spreadsheet. If you want my deduction spreadsheet, reach out to me and I will get you a copy of it. But here's just some of the things like meals, electronics, printing, copying, office supplies, coaching, consulting, passports, postage, dues, clothing or dry cleaning, travel, gifts, prizes, contests that you're giving to people, tax preparation, continuing education, cost of goods sold, supplies, childcare can be written off, cell phone, internet, all of these, and the list goes on and on and on. There's actually 475 different deductions that you can take advantage of by having a home-based business or a business in general. It doesn't matter that it's home-based. The only big deal about home-based business is that you get to take the advantage of writing off business use of home, so a portion of your house, and then also commuting cost on your vehicle driving to and from anywhere you go becomes a tax deduction. So you can see right here in the middle, and these are just some deductions for expenses that just generic expenses that you would have, like medical bills. Medical bills you can actually force to be 100% tax deductible if you have oh gosh, if you have what's called an HRA, which is a health reimbursement account. So meaning if you have more than $5,000 a year in medical bills, we can actually force 100% of your medical bills and medical insurance to be tax deductible as a business expense through something called an HRA. So $5,000 is a good number because it makes it beneficial for us to put that HRA in place. Things like property taxes you can write off. So like your vehicle that you're using for business, an RV that you would be using for business. If you had a portion of your house, you're writing off. Business use of home. So you can write off a portion of your interest, your property taxes, your insurance. You can write off your repairs and maintenance, your business use, your utilities. So all of those can be written off. Plus you can actually depreciate the house. And then charitable contributions, I'll show you how that can be forced to be 100% tax deductible, as opposed to not getting the benefit. 96% of Americans get no benefit from any charitable contributions, medical bills, medical insurance, property taxes, or interest on their house. And the reason why is because they don't have enough to itemize. And so they're already getting the benefit from that standard deduction, but yet again, they're spending all that money and still not getting any benefit on their tax return. Then you have your mileage. So mileage is actually increased to 65.5% this year. So 65.5% of every dollar you can actually write off for mileage. So that's pretty awesome. So if you had 10,000 miles, you get $6,500 in a tax deduction. Then you have meals. So if you go out to eat and you talk to people about your business, in 21 and 22, it was 100%. It goes back to 50% this year in 2023. Then you have things like your cell phone and your internet. So, I mean, if I pick up the phone and I call a friend of mine and I say, hey, I want to share something with you, I'm super excited about it. Why don't you let me come and talk to you about it? And so my friend says, well, yeah, I'd love to hear it. So I go sit down with them, have this conversation, and they're like, I'm not in, like, this is nothing I'd ever want to do. Okay, great. I appreciate it, because just having this conversation with me, it allowed me to write off my mileage here. It allowed me to write off my cell phone because I needed to call you on it. I needed my internet to run my business. I get to write off my meal 100%, depending on what year, or 50%. And then on top of that, I get to travel around the world with the people I want to travel with and learn and understand from. So that's a huge deal. And then from there, I get to hire my kids. Right. So I get to pay my kids up to $13,850 this year is how much you can hire your kids for, and they don't have to pay taxes on it, and neither do you. So that's a huge win-win. So at the end of the day, I get to write off my office supplies, my legal and professional fees, my electronics. All of these things are tax deductible, and I get to write them off on my taxes, as opposed to you having to pay taxes and then buying these things if you have enough money. So at the end of the day, if you're not in on what I'm doing, that's perfectly fine. But I just want to share with you what I'm doing. Right. And they may say, well, gosh, that sounds like a great option. I think I'd rather do that than what I'm doing currently. So, and these are just averages, guys. They're not minimums or maximums. And, you may not necessarily have all these expenses. Extra expenses that you may have would be like advertising, continuing education. Dues would be like monthly dues, cost of goods sold, products that you would buy and resell, products that you would buy and utilize for advertising purposes, meaning I'm a use products and I'm going to try them, and then I have a story to go back and share with people. So that's definitely a big deal. So you can write those off as well. All right. So that total that I just shared with you was $35,000. I'm not even going to use that number because I think that's a big number for most people to even swallow and fathom. So what I want to use is $25,000 in expenses, in business expenses. So if I take the average household on the left, just W-2 employee household, making 60 grand a year, they have their standard deduction, their taxes, their take home, their cost of living, they're going in debt. Okay. And I'm using low ball numbers. So I just want you to know I'm using low ball numbers just so it makes sense in people's heads so they can wrap their brain around it. If I take the same household, W-2 employee with a home-based business, $60,000 a year in income, $25,000 in business deductions. That's all I'm using, not the $35,000 we came up with. We have a standard deduction with the state and federal taxes and the FICA taxes, the take home, the cost of living, and what's left over, that difference is $5,600 if you're single. If you're married, it's $4,500. Guys, you'd have to make an additional $3 an hour to be equivalent to the amount of money that you would save just by having a home-based business. So that's why you'd be brain dead. You know, you can either go and try to find another job, you can try to make more money on your paycheck, or you can just start a home-based business, attempt to earn an income 3 to 5 hours or 3 to 5 days a week, 45 minutes at a time, and you're good to go. Okay, so this is mileage. I'll go over just a couple extra deductions that are super important. You have the ability to either take the standard mileage rate or actual expenses. And the standard mileage rate is 65.5 cents a mile right now. It's considered to be a shortcut method. You can't write off anything else other than tolls. So if you do have tolls and fees like monthly parking fees, you can write that off. But other than that, it's a standard. You take the 65.5 cents a mile, or you can do what's called the actual expenses method. So if we had 15,000 miles, 65.5 cents a mile, that's about $9,800 in the tax deduction. The actual method, this is, and I'll tell you this is almost never a good idea under the new tax law, but the actual expenses, we have to figure out what the business use percentage is. So business use percentage is the business mileage. And I don't know why I'm yawning, sorry. The business mileage divided by the total mileage equals the business use, okay? So if we had 8,000 total miles for business, 10,000 total miles, that's 80%. 80% of gas, oil changes, repairs, supplies, interest, car washes, insurance, property taxes, all of those things. Add them all up, multiply them by the business use percentage. You have your depreciation, or you have your actual expense amount that you can write off. So let's say it was 12,000 actual expenses, 80% for business use, $9,600 in a deduction. But wait, there's more. You get to also depreciate the vehicle. So depreciation would be, let's say you buy a vehicle that's over 6,000 pounds, you actually, and you're using that vehicle for 100% for business purposes, you'd actually be able to write off 100% of the vehicle this year, right? If you have a vehicle that's under 6,000 pounds and you're using it 100% for business purposes, you would be able to write off $19,200 this year. So just so you know, I mean, it's such a huge deal. It's such a huge deal that you get to do actual expenses, because not only are you writing off your actual usage, plus you're getting the whole depreciation. So unless you're spending more than 15, 20,000 miles a year on your car for business purposes, it's always going to be better to do actual expenses, unless you have an older car and you're not trading a new car every, 3 or 4 years. So hiring your kids, this is another one I really love. You can actually hire your kids now. You pay them to do what you pay them to do things that you would pay someone else to do. Kids are expensive, right? They have tons of things. They have sports and dance and video games and, smartphones and all this other stuff. I've not updated this slide, but this year you actually can pay your children $13,850 a year, and they don't have to pay tax on it, and you don't have to pay tax on it either. So what that means is that you're going to save between roughly $3,000 to $5,000 per child per year, just by getting a bank account with their name on it, transferring money over into it, having them help you work. And then from there, it doesn't matter what happens to the money. It doesn't matter what you do with it. Now, you do have to set up payroll. So this is not something you just say, I've paid my kids and pay them. We would be able to help you with that process. It's super inexpensive and it's super easy, but we would need to actually process payroll tax returns, and then process W-2s. So if you need help with that, you can reach out to us. There's no Social Security taxes. There's no unemployment. There's no FICA federal, nothing, no matching FICA or federal, or no matching FICA taxes that you would have to pay as long as the kids are under 18. If the kids are over 18, here's an added bonus. You do have to pay FICA taxes on them, and they would have to match the FICA, but you can actually give your kids what's called an employee benefit for college. And so you can actually pay them up to $52.50 a year in a college benefit. Okay. And I think I I talked to Tina earlier about this and just talking about my swimming pool. So, you know, we just recently bought a new house last year. That house has a swimming pool. It has a 2,000 square foot garage that we're actually using for business purposes. And so the swimming pool is 100% tax deductible for us because we have our children are our employees and they work on our property. And we also allow our staff to go and utilize our swimming pool as well. So keep that in mind. If you have people coming over for social gatherings, then you can also write off at least a percentage of your swimming pool, your exercise facility. You can do a golf course, you can do a tennis court. That's actually tax code, are those 4 things. So my favorite tax deduction I like to talk about is social giving. So helping enough people get what they want, you'll automatically get what you want. And I truly believe that, guys. So, I mean, I know that I was put on this earth to teach more people how to save more money so they can have more, live more, give more. And then from there, I can then nourish more and free more children from sex trafficking. So these are the 2 nonprofits that we work with, the Last Well and Manna Relief. And so one provides advanced immune support to children. The other provides safe drinking water. They're great nonprofits. I know the owners, they're friends of mine. And so if you're looking for a good nonprofit, these are the 2 that I would suggest that you get involved with. And what we have been able to do, and I didn't have this in the slide, but what we've been able to do is provide advanced immune support to about 15,000 children every single day. And that has been pretty amazing. So how you give from a gross income level. Well, let me step back. Social giving is about giving from a gross income level as opposed to giving from net income. So if you're in the world and say, okay, for every $100 I bring in, I want to do this. For every dollar I bring in, I want to do this. Every product I sell, I want to do this. Every consumer I bring in, I'm going to do this. That allows your business to be treated as a social business. And so now every bit of the giving that you give, instead of it being charitable contributions, it actually is connected to your top line. And so now you actually get to write that off 100% for business purposes. So for every dollar that we bring in, we provide a serving of advanced immune support to children in need. And so from there, we're able to provide about 15,000 children a day with advanced immune support. So anyway, find a nonprofit that you're excited about. Figure out a way to give from a gross income level. It could be 1% of what your giving is. It could be 5%. It could be 10%. It could be whatever you want it to be. Just find a business model and go with it and continue to do that and connect that back to your consumer. So your consumer knows, hey, not only are we making money, not only are we helping people, but we're also giving to this nonprofit and we're doing these things. Okay. All right. So when you start making more money with your business, there are plenty of ways legally, morally, and ethically to keep more of your hard-earned money. So my favorite tax deductions obviously are giving back, the social business, the employee benefits, because I can do the swimming pool and the golf course and tennis court, arcade, all that good stuff. HRAs, which we talked about earlier. HRAs is a way to write off your medical bills and medical insurance 100%. Travel, obviously, because everybody loves to travel, I think. And then hiring your kids. And then the last thing, and we won't go into detail on this, but there's something called a conservation easement. It's a way that you buy land through a program. It's a Reg D offering, and then that land then in turn becomes a charitable contribution, and so you get a multiple of what you're putting into this conservation. It's called a conservation easement. So you're buying land essentially through a program, you're giving that land to the government, and because of that, you get a multiple on your money, which is typically a 5-time multiple. So these are for people that make over $350,000 a year. If you're in that category, then we need to probably talk about conservation easements. So very beneficial. The government allows you to take your losses against any form of income that you have, or you can carry those losses forward forever. So, I do have people that actually, on paper, they're showing a loss. With all of their income, they had more business expenses than they had in income total for their whole tax return. And so we get to claim the loss carry forwards. A lot of people did that back in real estate in 2008. They lost everything they had. And so I've got one client that's literally had a loss carry forward since 2008 and has never paid taxes since then because he had such a huge loss. Not a good way to go about doing things, but that's definitely so you understand where I'm coming from, that's a legitimate thing. If you lose money in a business on paper, then you can continue carrying forward those losses, or you can write it off against any other income. So what I find is very beneficial for a family, you know, someone that is not working in the house, have a home-based business, and then you have the spouse who has a W-2 job, and then they offset each other and actually put his income or her income down to a lower tax bracket, and they're paying less money on their income. So great way. So just so you know, I mean, we talked about this earlier, you'll always pay less in taxes as a business owner than you was as a W-2 employee. And I explained this earlier. W-2 employee, you make your money, pay taxes, then buy some of your wants and needs. And then from there, as business owners, you can truly make your money. You have your business expenses, which are redirected living expenses, AKA wants and needs, and then you pay taxes. That is the true wealth system, guys. Now, the last thing I want to talk to you for, these are for people that are making money in business already in network marketing, or you're starting to do so. So how do you keep more of your hard-earned money when you start making it? One, you want to register as an LLC in your state. And the reason why you want to do that, and I would say your gross income should be around $1,000 a month. Once you're making that, you know that no matter what, you're growing your business, and that's going to continue to grow unless you just stop. So as you're making that $1,000 a month, get that LLC in place. And what that will do is that'll start the clock ticking. And the reason why we want that clock to start ticking is because you have the ability with an LLC to treat that LLC as an S corporation for tax purposes. And what that does is gives you one of the biggest tax deductions that you can have. It allows you to bypass self-employment taxes almost completely. So let's say you made $60,000 this year on your business. You'd have to pay federal and state taxes, but you'd also pay self-employment taxes, which are FICA taxes, okay, of 15.3%. Now, that would be $9,180 if you didn't have an LLC treated as an S corporation. Now, just having the LLC does nothing other than starts the clock ticking to be able to take the advantage to treat the LLC as an S corp. So you still have to get the S corp election. But if you do so in this situation, it would save $7,000 in taxes because you can bypass 80% of this. So here's how an S corp election works. You would have a personal and an S corp return. So you'd have 2 tax returns instead of 1. That's really the only difference, other than you would process payroll of 20%. We would help you do that. And then only paying self-employment taxes on the 20%. So once you reach $12,000 to $15,000 a year in your net income, it's very beneficial to treat that LLC as an S corporation for tax purposes. And here's what it looks like. So that $60,000, that same taxes, we're going to pay $9,000 in self-employment taxes. In this situation, you would take 20% of that 60,000, which would be 12. You would pay self-employment taxes on that, which is $1,800. So that's saving you $7,000, a little over $7,000. Okay, so that's how that works. Now, another reason to be a business owner, you know, this is the same situation. So a pass-through entity deduction, or what's called a QBI deduction. So you only have to pay taxes on 80% of your income from your business. So let's look at the same $60,000. You're getting a tax deduction of 20% of that. So you don't have to pay tax on $12,000. And then 25% of that, which will be your tax bracket, you're saving another $3,000. So there's just another reason why you'd want to be a business owner and make your money as a W-2, as a business owner, as opposed to a W-2 employee. Now, here's my last slide. Well, next to last slide. This is my summary. So there's never been a better time to have a home-based business. You need one. Find one, attempt to earn an income, go share it with people, make more money. And then as you make more money, obviously you're getting much bigger tax deductions. Take the tax deductions that you're entitled to take. Do not let someone tell you that you're not entitled to take tax deductions because you haven't made any money in your business, or that, you know, it's considered a hobby because you haven't made money in 3 out of 5 years. As long as you're attempting to make money and you have made $1, then you're good to go. Okay. So I'm not telling you to milk this thing. I'm not telling you not to attempt to earn an income. What I'm telling you is attempt to earn an income, share the information with people, whether you suck at it or not, then you can get the tax deductions. Hiring your family are huge. So hiring your family to get the employee benefits extras that we talked about is a huge deal for you. So I definitely suggest you do that. Plus, you're also saving money on taxes by hiring your kids to work for you. Hiring an accountant that actually understands your industry and understands what you're doing and is willing to have your back if you ever get audited, I would tell you is crucial and key. If you're trying to prepare your own tax return, I would tell you, I have a client right now that owes $16,000 in taxes because she tried to prepare her own tax return and got herself audited. That would never have happened had she had used an accountant, because you're 10 times less likely to be audited if you're actually have an accountant. I've had maybe 15 tax returns audited in the last 22 years. So you're just have a much higher likelihood of being audited if you use your own tax software or use somebody else's tax software to generate your tax return. That's just the truth. Okay, and the last thing is tracking your expenses. That is very important, especially if you were to ever get audited. And one of the softwares that we use, we can connect you to it. It's much cheaper than QuickBooks. It's called Hurdler. And we use a pro version of that that's not available on their retail website. And that will connect you to us so we can actually help you through the process. But Hurdler is a great software to keep track of all of your expenses. And guys, share this information with everyone. I mean, regardless if somebody wants to do a network marketing company or not, or wants to be involved in your company, they all need to know the information about how to save money in taxes. So don't be brain dead. Decreasing your taxes is the fastest way to wealth. And then here's my information. So if you're interested in having a conversation with us, we do tax strategy sessions, 30-minute tax strategy sessions. You would book that on our calendar. You're actually going to talk to me. And then so I'm going to go through the process of telling you what you should have done, what you need to do moving forward. And then if you have any other questions, I'll be happy to answer them. And then we'll also give you our pricing and what we charge. We are full service. So we set up LLCs, we set up S Corp elections, we do bookkeeping, we do payroll, we do tax prep, we amend tax returns, we go back 3 years and amend tax returns. So there's my information. If you want to get access to that deduction spreadsheet that you saw earlier, you can actually find that on this link tree down below. Okay. All right. I think that's it. So it's not about, guys, it's not about what you make that matters. It's about how much you keep. So that's the biggest deal. How much you can keep morally, ethically, and legally in order to, keep you from giving away your business. So that's it.
All right. Was that not amazing, you guys? Let me get our attendees back up here again so I can see. There we go. Let me get pinned. There we go. Courtney, thank you. I think when you wrote off your home gym and your pool because your family are your employees, like the first time I heard you say that, it was like, I need a swimming pool. Right. I've got all trees in my backyard, so I wouldn't do that. But the land conservatorship was new information that I'd not heard you talk about before too. Yep. So for those of you that do not have a home business and are watching this, I hope you watch it twice so you fully understand. Like she said, there are two tax systems, one to keep you broke and one to keep money in your pocket. And it's the way the government was set up, right, Courtney?
Yes.
I know that, that's one of the reasons you go to Facebook jail too, yeah. Is because she's very vocal about that. It is not fair the way the tax system is set up anymore. And it never was. No. It is for the rich people.
Yeah. Well, and I mean, let me just say this right now. The IRS is owned by the International Monetary Fund. The International Monetary Fund is owned by the United Nations. So the very same people who own the Federal Reserve and all of the banks, the Rothschilds, the Rockefellers, Vanderbilts, the Lees, Onassis, Kennedys, all of them, they are the same ones who own the IRS. So we are giving our money essentially to them. It's not going to our government. That's why you see millions and billions of dollars going to other countries. It's because we don't own the IRS as a government. America does not own it. It's not going to benefit us. So if you have a concern at all in paying taxes and it trying to benefit something, all you're doing is sending your money elsewhere.
Yep. There's one question that popped up in the comments. Do you use profit first strategy?
I don't know what profit first strategy is. I've seen some people have some books on profit first. I know I know essentially the concept is paying yourself first. I will tell you, if you are going to have a legitimate and sustainable business, there's no way in the world in the beginning that you can pay yourself first. I mean, I've just done this. I don't know. I've ran a couple companies in the dirt. I've lost everything I own twice. Um, I'm smart enough to know that you have to pay your business first. And then after that, after you build it up like we have today, I mean, we've gone from a $24,000 a year accounting practice in 6 years to almost $4 million. So that didn't happen by paying myself first, I guess. So, and now there are some businesses, network marketing in general, you don't have to spend a lot of money in network marketing to get started. So, but I mean, if you're doing a brick and mortar, it's very hard to pay yourself first and not have enough, and there's been times I've, not borrowed money out of the company, but I've spent money out of the company thinking we were going to have enough, and we have a shortfall. I mean, I lost my entire business over $2,000 a month. My first business that I built in 2011, I had 3,500 clients at that point in time at 29 years old, and a very thriving insurance agency. And I was 2,000 short a month in cash flow. And had I had that money, I wouldn't have lost my business. I wouldn't have made a wrong decision. I wouldn't have sold it. And the guy I sold it to, he stopped paying me after 4 months, and I was $250,000 in debt. And then my credit was shot, had to file bankruptcy. So no, I'm not interested in the profit first. Not until you get to a point where you're sustaining your business, because so many people just start pulling money out and they don't get to a place where they're sustainable. But yes, I understand the concept. And I mean, if you're doing that and it's working out for you, that's great. It just doesn't typically work out for regular brick and mortar companies.
Thank you. Another question, is it beneficial to consult with you and use your services for someone who is just starting out in network marketing or a home-based business? Would your services pay for themselves just in tax savings if someone took your advice?
Yeah, I mean, we only charge $99 for a tax strategy session. So, I mean, yes, you're going to get at least that plus some out of the call, and the money you pay us is a tax deduction as well. So,
Right.
everything, and that's one of the things I tell people, especially as you start making more money, the around the area of $12,000 to $15,000 a year, depending on what state you're in, because there's different fees that are involved in LLCs for some different states, like California and New Jersey and New York are higher fees. But 12 to 15,000 is a good range. And people are like, well, I'm paying you more money. Well, yeah, you are, but the money you pay me is a tax deduction, and the money that you pay to the IRS is not a tax deduction. So even if you paid them the same amount of money that you paid us, which essentially you would still pay us less than you pay them, but you're still now getting a tax deduction for this year. So if that makes sense. But yeah, I mean, I think you book a tax strategy session, it typically, if it's something that it takes 10 minutes to have a call with you, I'm typically just going to credit that money back to you having services with us. So I'm the one that does all the calls. And if I can't give you enough information for it to be beneficial, then I'm going to give you a credit towards us preparing your return.
Yeah, absolutely. And for those of you that are on my team and in my company, I see a lot of you on here. Going to Rank Makers is going to be a tax deduction.
Yes.
Not only that, it's going to explode your business next year, giving you more income to help with your family finances, giving you more tax deductions and things like that. So if you have not gotten your ticket to Rank Makers yet, you've got to do that. And then do you do taxes for other states? Yep. She's in all 50 states, you guys. Yeah, she can do it all over. She's nationwide.
And I'll tell you this, I mean, guys, I built my entire accounting practice through the network marketing industry. I built it through what I learned in network marketing. I picked up the phone and called seven leaders that I knew in the network marketing industry. I was actually on my way to go sign up for another company. And because me and my husband had made the decision that once I could get my income up to a point where we were sustainable, we were doing at least 10 grand a month from accounting, that I could go back to network marketing. That was our deal. So I love network marketing. And so I was on the way, I was driving in Tampa, Florida to meet the owners of a network marketing company. And I heard those statistics by Grant Cardone. And when I heard them, I'm like, man, like I can't join a network marketing company. I'm the only person that actually knows how beneficial being in network marketing is and has the credibility to be able to do it. So it's one thing for you to say it. It's another thing for me to say it, because I'm not financially benefiting from anybody who joins your team. So a lot of times when I was in network marketing, people wouldn't listen to me as an accountant because they're like, oh, she's just trying to get us to join her team. No, that wasn't it. I just cared enough about them to tell them. But so I heard those statistics and I'm like, man, if I could just share this information with the network marketing industry, I could benefit all of us, because I could go out and tell the information, they could send me the clients, and then we could grow the practice. And I had 12 clients, 12 at that point in time. That was in August of 2018. Now I was a CFO for those 12 clients. So I was fractional CFO. So I made really good income off of them, but I switched my entire practice around by one webinar. And then I started going to Tony Robbins events, and I kept meeting people and I got the skills and the information that I needed. And I was around people who kind of freaked me out in the beginning because they were making so much more money than me. But I'm like, man, if they can do it, like I know my power. I know what I have. I know the skills that I have. I know the mindset that I have. And there's no way on this earth that they should be making more money than me. And so that's what you'll get when you go to Rank Makers or you go to other events, because you're going to get that mindset and you're like, Tina's the same as me. Ray, like I knew Ray, me and Ray were in a network marketing company together. I mean, I knew Ray way back when Ray wasn't Ray Higdon. You know what I'm saying? And so you look at it and what did Ray do? Ray consistently every single day showed up on a Facebook Live and has built a following of hundreds of thousands of people. And I think he's got 20,000 people in Rank Makers.
I think so.
That's crazy. But I mean, all he did is decide one day I'm gonna get up and I'm gonna start doing this. And for me, the reason why I stopped, which I'm going to start back now doing more interviews. So anybody on here, if you want to do an interview, reach out to me. I'll be happy to do it for you. But I just got to a point where we had grown so fast, so quick that I had to just stop. And I mean, for the last 18 months, I've barely done any interviews. And the reason why is because I had to get the systems in place. It wasn't fair to you guys for me to continue taking on 30 clients a week when I couldn't take care of the clients that I had. So we really just stopped and took a step back and said, hey, we're going to get these systems in place. We're going to get the staff in place. We're going to get everything rocking and rolling. And now we're finally there. And so that we can start growing and building again.
Yeah, absolutely. I appreciate you so much. I hope I get to see you again this year at Rank Makers. And that's another benefit, you guys. If you go to Rank Makers with the team, you'll get to meet Courtney at Rank Makers. Right. This is one of the things. And like she said, it's that whole, you walk into a room and you see these people doing these incredible things with their lives versus you stuck on a Zoom call, which is not bad. You know, I mean, that's the only way we've been able to communicate for the past couple of years for a lot of reasons. Right. Don't get it, Sarah. And, but going to those live events and just catching that excitement and that energy.
Yes.
It's, I would say if I could tell you that it's required for you to go to Rank Makers to grow your business, I would say that, but you're your own boss. That's and right. It's up to you to make that decision. And if you do go, I would love it because I will be one of the speakers and I would love to have you there. So
awesome.
Yes, Courtney, thank you again for everything. I'm going to put some links together, update the post that they have, the spreadsheet, how to book a session, and different things like that. Your books. I know awesome. My friend Kathy she put in there, she's already gone to Amazon and gotten your books in her cart. So
awesome. Thank you.
All right, you guys, thank you very much. Have a fantastic day. And I appreciate you.
Thanks, Tina.
Thank you.
Bye, guys.